Let's take a look at the bigger picture. Tom Plumb is with us, CIO, Plumb Funds, and manager of the Plumb Balance Fund. Thank you so much for being with us. Of course, we're talking about deadlines now. One of the reasons why the market likely sold off. China had noon today to lift its retaliatory tariff. Now the U.S., the White House saying 104% tariffs, and this will go into effect just after midnight tonight. The battle is on, a trade war, I don't know, but whatever you want to call it. In the meantime, the markets jumped to 4% plus and then sold off. Some of your thoughts?
Well, obviously the business-friendly Trump administration has caused a lot of uncertainty, and uncertainty means that people don't do anything. They wait to try to see what's actually going to happen. And on top of it, it's potentially creating some significant supply chain issues, almost same, only different cause that we had in 2022, which led to a pretty significant stock market decline that year.
So look, the VIX right now is at 48.33, has been moving around. I mean, we had talked about it being down about 20% this morning, but it's back to where it was because it shows there is some nervousness and fear in the market, right?
Right. I mean, there's no question that if any measure you use that we're oversold, but oversold doesn't mean it's going to bounce back up. But what we did see this morning is that there's the potential for catalysts to see a reversal of this decline that we've had so far. But you still need certainty, and it's going to be very volatile as people try to figure out what the actual scenario is going to be for their businesses and for the markets and for trade, all these different issues that are overhanging us right now. But we'd expect a lot of volatility. And it's also pretty clear that you don't actually see a bottom until after the fact.
Understood. It's hard to know when you actually clock in that bottoming and the bottoming process. I mean, would you say we're in the bottoming process or not yet?
I'd say we're in the bottoming process, but of course that doesn't necessarily mean that we couldn't go lower. But I do think that what we have seen is some remarkable companies that are now at reasonable prices, and prices that probably a year from now, maybe even 3 months from now, you'll think would be very attractive, and they would have been great entry points.
So at this point now, I know you're trying to pick some stocks. First of all, were you buying today or selling today?
We bought a little bit today. We were buying a little bit yesterday. Again, it's hard to talk about a company like Nvidia, for example, and saying it's underappreciated when it's the third largest company in the S&P. But, trading at 20 sometimes earnings, lowest level that it's probably ever been, company that's really fueling the digital revolution, all aspects of it. We talk about artificial intelligence, but there's so much more to it. We do know that there's going to be some component issues. There's going to be some sales issues on who is allowed to buy their product. But still, if we're 40, 50% revenue growth this year and profit margins over 60%, 20 sometimes earnings, I think it's pretty underappreciated right now.
So there is opportunity in tech, as you just noted, with Nvidia, because that's under $100 still today. The recent high was 153, so it shows how much it's been beaten down. What about names like Visa, MasterCard, JP Morgan? Those are three names that you're watching and or like?
Well, actually, we bought some JP Morgan yesterday. Visa and MasterCard have been long-term holdings and will continue to be. But if you think about it, when you can buy JP Morgan, still the best financial institution or one of the best bank-based financial institutions in the world, at 12 times earnings, I think you're going to be fine. It obviously is discounting the worst case scenario, maybe a recession, but even a recession will probably get them to skate through because they're the strongest bank in the world. When you look at Visa and MasterCard, they are the digital financial tools that are necessary for all the types of transactions that we have, from people to business, to people to people, to business. There's still so much unmet need there. And again, you take Visa, 55% gross profit margin, consistently double-digit revenue growth and high teen or at least mid-teen earnings growth. MasterCard a little bit faster because of some of their exposure to other businesses. But these are companies that you're not going to be sad that you own today, and you're not going to be sad a year from now.
All right. Visa, MasterCard, Nvidia, and JP Morgan. Tom Plumb, CIO, the Plumb Funds. Great to see you. Thank you very much.